Alright, so here is the second video in my 3-video series, and this one hopefully won't be too long, but I have quite a bit to cover here. This video is going to go over exactly when my trades are entered into the market, what to expect from them, and profit potential each month, what's the drawdown, so the floating loss potential as well, how long do you have to wait for trades to close out in profit, and so on and so forth. So let's get started. You can see the test at the bottom of the chart here, and there are two losses. There's one right here, and there's also one over here. You can barely see it. This is a test over about a 9 or almost 10-year period. It's still going, and it's running on every tick. So the test shows me price accuracy at a 90% rating. So that means that there's still a 10% chance for fluctuation or change. So these results are 90% accurate compared to how it would be trading the market actively. And because, I mean, it's still pretty good. It shows you what your strategy is capable of at a 90% rating. That's pretty awesome. And I've also copied my trades from a test like this to live trading to see what the difference actually is. And it's very, very close. And you can see here, I actually have an account running at $118,000 with $118,000, over $118,000, using this strategy. And you can see that the entries and exits are very similar, almost identical. So I'll come back to this account in just a second, but I'm going to go over the trades here. Actually, you know what? Why not just go over the trades in the live account, so you can have some real money to look at. So if you're wondering if it's a real account or not, let's just pull this down a little bit. Okay, my picture just got really small. We'll make it a little bit bigger. Okay. Alright, so you can see at the top right that this is a live account. This is real money. Alright? And these are trades that were actually taken and gave profit to this account. So let's look at a couple of these trades to give you a better idea of why they were actually entered. So I use this indicator called the RMI. The RMI helps me find when the market is overbought or oversold. Now, you may have heard that term in the stock exchange or somewhere investing, but overbought means that the price is well overextended in one direction, and this indicator shows me when that happens. So when this orange line crosses the red right here, it means that the market is currently in overbought, and there's more potential for it to push down at that point. Oversold is just vice versa. Pushes down, breaks the red line under 30. That means that we're in an oversold situation, and we're more likely to push back up from there. So that's our filter. We look for trades that are above the overbought or under the oversold. And I'm a counter trend trader. So that means I look for price to push up in one direction and look for when that one direction, no pun intended with the band name, but I look for price to push up strongly one direction and then slowly that intended direction on the upside to slow down and then start turning back around. Now, price doesn't usually do this kind of movement where it goes straight up and then straight back down. A lot of times you can have a peak, but it's never like perfectly smooth. And in this case, it went up and it went back down and it went back up again, right? But this indication of this small movement down showed us that price was slowing in its intended direction upwards, and it had another extension up, but then it slowed again right here and had another pull back down, went up, and another pull, went up again a little higher, and then pushed down in a big way on this one. So price was seeing a lot of resistance up at this top area, showing us that there was a good chance for price to fall back down. So we're looking for sell positions. This is what the red is. So this is a sell position. That means that we're looking for the market to go down. And when we see a blue arrow, that means that we're buying into the market and we're expecting it to move up. Alright, so our entry candles, or our setup, is price above, overbought, and a 2-bar candle setup. Now each of these candles are 30 minutes, so they're 30 minutes each, and they show you how they reacted to the market. So this is a candle that opened up and closed higher, so that's a bullish candle. This is the candle right after is a bearish candle, and it closed lower. It's the same thing here. Bearish candle, opened and closed lower. That's what the body of the candle is what you see. So this 2-bar candle setup shows us a bullish candle followed by an inside bearish candle. So bullish candle, inside bearish. And we want the bearish, even the wicks, to be inside the previous candle, including its wick as well. So we wait for that candle, the bearish candle, to close, and then we enter directly after that on the next candle, looking for price to go down. We didn't quite get the price to move down enough. It moved down a little bit, but then shot back up, right? So we tried a second time. And on trade 2, so trade 1 is still in. We're holding it through. And then we also entered a second trade. And this is called basket trading. So we'll have 2 trades in at the same time. And then a third trade went in. Third trade. And it's because we were wrong on the first one, we were wrong on the second one, and then we were right on the third one. And price reversed, it went down, and we closed all of our trades at the same time right in this area, right here. Okay? So we were able to come out with an overall profit, even though the first trade was a small loss, but the second and third trades were much larger gains. And so when we closed all the trades out at the same time, we come out with a realized profit. Alright, so that's on the sell side. What about on the buy side? Well, push down, trend on the downside. Since we're counter trend trading, we look for the push down, we look for it to slow, inside candle set up here. You can see the 2 candles, except it's complete opposite. It's a bearish candle followed by an inside bullish candle. Entry, price below the 30, the oversold. 1 entry, exit, profit. Okay? So that's basically the fundamentals of how my system works with price. It looks for areas in the market where we can have a pullback after a big push, pullback. Big push up, pullback happened. And then moving on. Took us a few trades to get this one right. 1, 2, 3, 4, 5, 6, 7. 7 trades. But on the 7th trade, it did move all over. But how do you might be asking, well, that seems like a lot of risk. Well, each trade is this very small amount of risk on the account. It allows us to continue entering positions if we're not right on the first one, in the second one, in the third one. It gives us basically another chance to correct the trades. And sometimes positions can be quite a few if the market continues to go against us. But that's how we work a situation like this. We can't be right on every single setup. And so that's why we develop a money management strategy to help us make trades that started out not that great better over time. And you can see that this trade, a basket of trades, actually ended up closing out altogether for a realized profit. And even though the first few trades were losses, the bottom few trades were not, and we were able to come out with a realized profit overall from all these multiple trades. 1, 2, 3, 4, 5, 6, 7, 8. So all these trades. So 8 trades were able to come out in a profitable gain. All right. So I wanted to bring up how the gains. Now, let's say you start with a $5,000 account. We are doing 15% per month, which is what I'm estimating now. I would think that the 20% was too high, but I want to be safe with your investment now. So what's possible with 15%? 180% over 12 months. Let's do the calculations. that is about 30,000. So 5,000 into 30K in about 12 months. Now that's a really good gain. It may be something that you're not used to in the crypto world, but this is different. This is different, and you can see the profits that are coming in through the account on for every trade. You can see this trade being executed. You can see this one being executed, and you can see when they close out for profit. You can see your balance grow. But the cool thing about this is that you will always be able to, if you deposit 1,000, your 1,000 will always be in there. It will display in there, and you'll always be able to withdraw it anytime you want. And you're not tied in to a lot of these crypto investments like that you maybe have been involved in the past, where you give a crypto lending website your money, and you just hope that you come out with a profitable investment in the end. Sometimes that's the case, and you take a gamble with that. Here, the biggest gamble is, what is the biggest gamble? I mean, the biggest gamble is the potential for loss, really, because every investment has some kind of risk in it, and that's what I'm getting into now. Is that you're going to you should expect a maximum risk of about 25%. So that means that if you have an account of $1,000, and that means that I'll be risking upwards of about 250 of that, and that's the actual dollars. And I'm not sure about this 25%. I'm not 100% sure if 25% is going to absolutely be the max. Right now, my account in the last 6 months has only received a 9% drawdown. And that means a 9% floating loss. Doesn't mean that this is going to be lost to 250, by the way. It just means that this will be in floating loss, and that you need to wait for the trades, for example, to close out and profit. So why, if I've only received 9% in the last 6 months, am I giving you an estimation of 25? Is because I want to keep you realistic. I want you to keep you expecting what may happen. Is 25% a lot? It can be considered a lot. Depends on how much money you have involved. But I want to keep your expectations realistic, and we may not ever even hit the 25% level. It might always stay at the 9%. I don't know. Or I might not even hit 9% again. It's hard to say what will happen, and so I prepare for the worst possible scenarios and develop my strategy behind that to stay realistic and to adapt, allow my strategy and myself and my emotions to adapt to the future market. So drawdown 25%, profit 15, I'd say is probably the highest that you could expect. There might be months that we could get 20, but I would say 10 to 15% profit expectation per month. And yeah, I'm going to continue to release some videos in hopes that you in the hopes that I can continue to educate you. The next video will go over what's needed from you. So like software, or what kind of software are you gonna have to install? What expectations should you have? Is there any further risks involved with the brokerage? Things like that, just little leftover things. And I'm going to release a video on that really soon. So stay tuned for that. All right, guys, I think that's it for this video. I hope I covered everything that I wanted to. If there's any other questions, please write in the comments, and I can think about releasing another video to follow up on this one if I ended up missing anything. Thanks so much for your support, and let's make some money together with my free copier. Thanks. Bye.